Coming up is the kitty making some moves, some interesting activity in GameStop options that could be a trade from Roaring Kitty himself. We will dig into that one when Fast Money returns. Welcome back to Fast Money. GameStop shares tanking late in the day amid a spike in trading volume in call options with the same strike and expiration as those owned by Keith Gill, aka Roaring Kitty. While it's not clear Gill was behind the trades, the options finished the day trading more than 40% lower than where they started. As of Monday night, Gill owned 120,000 June 21 expiration 20 strike calls. Baycrest Managing Director David Bull's back to help us make sense of today's edition of Meme Stock Madness. David, what'd you make of this heavy volume in this strike?
Well, like we said yesterday, no dull moments in GameStop. So again, today, right near the end of the day, 75,000 of the calls that you just referenced traded in the last 45 minutes, 90,000 traded roughly on the day. And, that represents what could be up to 50% of Roaring Kitty's total position if that were him unwinding. Now, looking at the tape, it did appear that these were sells, just looking at where they traded relative to the bid and the ask and the way that the stock obviously moved. It sold off, I think, 16% in the last hour or so. So that created, if the 75,000 contracts were selling potentially to close, that created roughly 6.5 million shares to sell from market makers on the other side. Typically, GameStop trades about 20 million shares in the last hour of the day. So 6.5 million would impact the stock. Now, in terms of how this may leave Roaring Kitty, that if the 75,000 were him, that could have generated $52.5 million in cash. And judging from the last screenshot where he showed, I believe, $29 million in cash, that puts him about $81 million in cash. Now, this would leave about 45,000 roughly of the June 20 calls. If he were to exercise those, he would need about $90 million. So we're getting pretty close to the math, to the money needed to exercise those calls if this was Roaring Kitty.
Dan, what did you make of this?
Well, it had to be him. There was 170,000 of open interest. He owned 120,000 of them as of Monday night, right? And if you think about these calls, they ended with a 83 delta. So to David's point, if you are a dealer and you are buying these from him, you are going to be hedging them by selling stock at an 83 delta. And if you just look at, David just said, a lot of volume traded at the end of the day. And I'm looking at this stock, it was 29.5 at about 315, and it closed the day at 25.46. There's no real buyer of this stock other than shorts, right? If you think about it. So to me, it had to be him. And I wonder, there was a lot of looking into his activity and the like here. This would be the sort of thing. He said he's not selling. And again, it's not illegal to go out and do that sort of stuff, but
do you know if the open interest went down by?
Well, you'll know tomorrow, but
okay.
It must have.
Right? I mean, I saw it to
and you
close,
can see
so that...
if things where they're trading and how they're trading.
All right, David, thanks.
Keep in mind that Keith recently posted this meme on X, showing options 101 on a laptop screen and what could possibly be a poster of someone exercising in the background. Take that as you will. Now, the reality is that in Keith's E-Trade account as of his most recent position update, he had about $29.4 million in cash, and that is nowhere near enough money to exercise all 120,000 of his call options. So, could he be selling some of the calls to have enough cash available to exercise the remaining calls? Perhaps. I think we will know more in the next couple days. Now let's quickly cover everything that's happened with GameStop over the last 24 hours or so. First, GameStop announced yesterday after market close that they completed the at-the-market offering of 75 million shares and raised approximately $2.137 billion before commissions and offering expenses. This, combined with the $933.4 million they raised in the prior offering, and combined with the roughly $1 billion in cash they had before the offerings, we can estimate that GameStop has roughly $4 billion of cash on hand right now. That is fantastic for GameStop. When you look at GameStop's balance sheet, you can see that the company did not need to raise capital these past two offerings, unless they have something in mind to transform the company, and that is what a lot of investors are thinking. Also yesterday, the U.S. District Court of the Southern District of New York dismissed the BBBY lawsuit against GameStop CEO Ryan Cohen. This is very good news for GameStop, because now Ryan can direct his attention to running the company without being tied up with a lawsuit. And finally, remember, GameStop's annual meeting of shareholders is scheduled for tomorrow morning, June 13th, at 10 a.m. Central Daylight Time. That's 11 a.m. Eastern and 8 a.m. Pacific. Now let's talk about Andrew Left's Citron research. I find it amusing that they say Keith's livestream was an insult to the capital markets. All I can think to myself is, yeah, so what? Keith is just an ordinary guy minding his business, posting memes online, and sharing his opinions and his positions transparently with everyone. There's nothing wrong with that. Nothing at all. In my opinion, A greater insult to the capital markets would be when notorious short sellers use the smash and grab strategy. Some time ago, Andrew Left spoke with Bloomberg about using the smash and grab strategy. This is when a short seller takes a short position in a company's stock, publishes a horrible scathing article about that company, and then sells their short position within 30 minutes of the article being published. In other words, they cash in on the panic that they themselves have caused at the expense of everyone else before anyone has time to verify or refute their claims. Is that not an insult to the capital markets? I'll let you decide. At the end of the day, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.